stocks I'm buying December 2019 edition. Welcome in, guys, to my favorite series I do on this channel each and every month, and this is the last one of 2019. Let's just say 2019 has treated us very well. Let's hope 2020 does as well. In today's video, I'm going to take you guys through the 3 stocks I'm planning on buying in the upcoming month being December 2019. We'll go into each of these 3 stocks. I'm going to explain to you why I believe all 3 of these stocks are very good value and why I will make a lot of money on them over time. So I hope you guys enjoy this. As always, make sure you smash the thumbs up button. And just so you know, the deal just started for becoming master of the stock market. The Black Friday sale, the most insane deal we have ever done of the becoming master of the stock market course. Usually whenever we've done deals in the past, we brought it down to a $297 price point, but I figured it's Black Friday, and so let's do some type of sale we've never ever done. So it is $227 here today. I will have the pinned comment down there be the link to the $227. That course goes into everything I look for in stocks. So if you're serious about investing and you want to know everything to look for in stocks, how to make money from stocks and how to build a lot of wealth from stocks, go ahead and make sure you take advantage of that deal, because you probably won't see a deal like this maybe ever again, or you'll have to wait till next year, Black Friday or something like that. So I hope you guys enjoy that. Take advantage of that. Learn lots. It also has my private email address in there. So if you have any questions in relation to any of the lessons, feel free to email me and I will get back to you and kind of explain things. So I hope you guys really enjoy that course. Learn as much as possible. Pin comment down there. Take advantage. And let's start getting into this, guys. The first stock up of the bunch is a company named iRobot Corporation, ticker symbol IRB. Here today, this is like a $44 stock. And I believe this company is significantly undervalued here, okay? Let's talk about a few things. So first off, the thing that's going to throw people off is a trailing P to forward P. So basically going from a 14 to 34, that's usually a very bad sign. Whenever you see a company getting less profitable, especially in that much of a magnitude, a lot of folks are going to look at that and they're going to say, I don't want to be part of this stock. The company's way less profitable this upcoming year than they were last year, okay? Well, here's what is going on. Essentially, there are tariffs on robot vacuums right now. It's a 25% tariff, which destroys a lot of the profitability of an iRobot product. Like when you're talking about a 25% tariff on robot vacuums that are made in China and coming to the United States, that's a huge hit to profitability for iRobot's business. So that destroys a ton of their profitability here in the short term. But what people aren't even factoring in is if a trade deal comes, guess what? That tariff's immediately taken off, and immediately iRobot's business is massively more profitable, literally overnight, than it was as of right now. Okay, so this is something to take into account. Also, they are moving some production out of China into Malaysia to avoid those tariffs there. So it's something that should be thought about, that this company literally could improve their profitability massively overnight. It's just the US government is getting all that tariff money right now, because every single time they make one of those robotic vacuums over in China and then they bring it into the United States, they have to pay that 25% tariff to the US government. So it's just destroying profitability here in the short term. Whenever those tariffs come off, or whenever iRobot gets their production line moved out of China, guess what? Profitability will go up and up and up for that company, okay? But that's throwing things off here in the short term, and it makes it look like, oh, this is a business in trouble, when really it just has a lot to do with the whole tariff situation right now, okay? So we're paying $1.25 billion for this company, which is probably the smallest market cap company I own, or at least one of them. And whenever I see a number like that, like 1.25 billion, or whenever I'm thinking about like what am I going to get for 1.25 billion, okay? What am I getting for my money here when I invest in this company, okay? So let's start out here looking at the balance sheet of iRobot. It's a company with over $70 million in cash and cash equivalents, over $20 million in short-term investments, $248 million in inventory. Why is inventory so high? Well, basically, these numbers were taken September 30th. That's going into the Christmas shopping season, obviously, which is a time when iRobot products sell very well. So they ship all that inventory out to retailers as well as they sell on their website. And so that inventory number should come down quite substantially after Christmas time, essentially. But right now they have a lot of money in inventory. And what do they have for debts? They have no debt on that balance sheet as well. So needless to say, after Christmas gets over, they have, probably some huge volumes. They're going to have a cash balance of probably somewhere around 150 to maybe more than $200 million. All while this is a company with no debt. So which means if you take that off of the valuation, I'm paying actually much, much less than what you would even anticipate, okay? Now, with iRobot, what are we getting as far as the underlying business with this company? Well, we're getting the #1 player in the world when it comes to robot vacuums. They make the Roomba vacuum cleaner, which obviously robotic devices that clean your floors have just become more and more popular over the past 5 or 10 years. And eventually, I believe we'll get to a place where robot vacuums actually outsell the handheld vacuums that you would push around your house, okay? We all remember our moms maybe cleaning the house, and you know, she's got that vacuum, and then she tells us, hey, you need to go clean that room over there, and we gotta push the vacuum around to, you know, vacuum the carpets. I believe, you know, as we go into the future, that's gonna be a thing of the past. And those handheld like vacuums you push around, eventually over time, those will be just like forgotten about items, okay? They're also the #1 player when it comes to cleaning hard floors as well with their Brava robot mops. That's a much smaller business for them, but it obviously is a very successful business for them as well. And that's their second business. And then they have a new business they're getting into, which is essentially robots that can actually cut your lawn, okay? And that's kind of like a test product, I call it right now, because we're gonna have to see how that actually does in the market. My bullish thesis has nothing basically to do with that lawn cutting robot. Like if that does really well, that's just an extra cherry on top. We'll have to see. My whole thesis around this company is just very, very undervalued, and they're in the prime position, #1 player in a lot of markets you want to be in as these categories continue to grow in the future, okay? As we look at the income statement here, we're gonna see a lot of growth, okay? We're gonna see a lot of growth from 2015 to 2018. They basically took revenues from just over 600 million to nearly 1.1 billion dollars. And if you look at the trailing 12-month revenues, we're up to 1.17 billion dollars for a trailing 12-month revenue. So this company has consistently grown and grown and grown very, very nicely. Look at net incomes. 2015, this company's doing 44 million in net income. And you look at last year, 2018, this was before the tariffs came on or anything, looking at net income of 88 million dollars for the company. So needless to say, this company has phenomenally grown in terms of revenue and in terms of profits, and this is what you should expect when you're the #1 player in a growing category like iRobot is, okay? Now, as we look at a few more things here, we look at the revenues for next year. What's anticipated, and they should grow 10% plus again next year, okay? So this isn't like, oh, the growth is done for iRobot. No, they should grow another 10% plus next year. And if you look at, once again, the EPS, it looks like it'll only be $1.30 next year. At least that's what analysts are expecting. Once again, that is all because of pretty much the tariff situation. I think they'll actually come in better than $1.30, but needless to say, that is something that's going to hurt the business. Those tariffs are just going to hurt the business's profitability here in the short term. But as somebody that thinks about stocks over the next 3 to 5 years, I think we're going to make a lot of money. And somebody might say, well, why don't you just wait until the tariffs are taken off whenever that comes? And the problem with something like that is the stock will have already probably ran up way before that ever happens, guys. So that's what happens. You know, Wall Street likes to get in these stories a little before, you know, things actually change, and I have to beat them to that mark. I have to get in even before they get in, okay? So that's why I'm taking advantage, continue to buy down here in the 40s, and I will continue to do so, okay? Stock number 2 up here is Activision Blizzard. This is probably the one I'm buying the least of, I guess you can say, okay? And that's mainly because of the valuation of this company, but I have started buying a little bit. I think I bought $5,000 worth or so in one of my accounts like a week or two ago. And this is a stock right now. It's about $54 a share. By the way, Activision Blizzard's ticker symbol is ATVI. Activision Blizzard, they own some of the biggest video games you could possibly imagine, okay? Call of Duty, World of Warcraft, Overwatch, Candy Crush. I mean, these are some of the biggest games in the world, okay? So needless to say, when you're thinking about buying a business, you want a business that has unbelievably strong brands, especially when they sell to consumers, and this is certainly a company that has some of the strongest video game brands in the entire world, okay? So it's not like it's just a one-hit wonder or something like that, okay? They have 2 really exciting things going in the short term for this company. One is a new product they have in the market called Call of Duty Mobile. This gets unbelievably high ratings on the App Store, and people absolutely love this. This is a free product, but they have upsells in the game, and they made this in conjunction with Tencent. And needless to say, this is a smash hit. Call of Duty Mobile, smash hit. It's doing phenomenal in the market, and that should be something that definitely benefits the company over the next couple years, okay? And they just launched a new Call of Duty Modern Warfare game, which I can say I've tried the game, and it is absolutely phenomenal, okay? And sell-through units grew at a high teen percentage versus Call of Duty Black Ops 4. So sell-through is actually going much stronger than Black Ops 4 last year. console sell-through grew strongly and PC grew over 50% year over year. So needless to say, they got a smash hit in their new mobile game they launched, and with the new Call of Duty Modern Warfare, which is for like PS4 and the Xbox and whatnot, that is doing unbelievably well in the market, owns some amazing brands, okay? And if we look at this company, I think there's going to be some exciting stuff that happens over future years. Needless to say, the operating margin for businesses like Activision and Blizzard is so unbelievably low compared to something like King, okay? King's got a 39% operating margin. Blizzard's at 19%, Activision's at 12%, and I believe in future years, I believe they'll get those operating margins, maybe not to a level that King is at, but I think they'll grow and grow and grow, and I think over time, they can get these businesses to operating margins probably in the 20s. They're going to have learned a lot of things from that King acquisition they did a few years ago and how to make successful mobile games, how to upsell in those games and things like that. So I think over time, they'll do much, much better and be much, much more of a profitable company, let's say 3 years out, 5 years out, than they are here today, okay? Now, around their balance sheet, this is a company that is strengthening their balance sheet a lot, okay? I love a great balance sheet, and Activision definitely has a balance sheet that continues to improve. So if you go back to basically September 2018, this was a company that had basically net cash about $0.7 billion, so essentially about $730 million. But now you fast forward to today, and we're talking about net cash of about $2.25 billion on the balance sheet for this company, which is definitely a dramatic change for the company. So I love a company that has a great balance sheet. I love a company that is strengthening their balance sheet, and that is exactly what is happening here with Activision Blizzard. And now we're talking about, you know, as this company continues to grow over the next year or so, we could get into a situation where this company has net cash of $3 or $4 billion by maybe this time next year. We'll have to see. So that's very, very exciting that they're continuing to strengthen their balance sheet, okay? Forward P on this one is just under 22, which definitely makes me say, you know, I started a position in the stock, but I'm not buying super heavy. I would love to see a forward P under 20 in the stock. If that happened, I would start buying these shares at a very rapid pace. Let's just put it that way. But for now, I'm just kind of like biting off a little shares here and there. If the stock goes into the 40s, I will buy very heavy because I definitely love this business. And they just have the wild card out there, which is their Major League Gaming, which is certainly exciting. And a lot of us that come from like the traditional sports world and we're used to like the NFL and the NBA and whatnot, we never even really thought of like video games that are like have their own leagues and whatnot. But that's definitely some huge potential there. And so that's just kind of a wild card, maybe a cherry on top if they continue to grow that over the next 5 or 10 years, and maybe that becomes a massive thing. I mean, you could already make an argument that it's already a pretty big thing, but maybe it, becomes a worldwide phenomenon over time. We'll have to see. That's not my bullish thesis around it. It has nothing to do with Major League Gaming, but that's just kind of like a cherry on top, okay? That was stock number 2. Let's get into stock number 3 up here, which is good old Uber stock, good old Uber stock, okay? Ticker symbol, Uber. And this is stock number 3 of 3. About $29.49 is what the share price is here. Main thing that concerns me is Jim Cramer said it's now worth buying Uber, which is funny. I swear I just saw a video with Jim Cramer like a couple weeks ago, and he was saying he was not interested in Uber stock, and this was when it was like $25, $26. Now it jumped up to $29, and now all of a sudden he's interested. Anyways, that's just a joke, guys, okay? If you know anything about that, you'll get a good laugh out of that, okay? So what am I getting for Uber, okay? I got to pay a valuation of $50 billion, so not a small number at all. But what am I getting? I'm essentially getting the #1 player in the world in the rideshare category, which is a massive category that continues to grow. We're talking about this is something that has completely changed transportation and will continue to change the transportation market over the next 5 or 10 years. This is something that's not only disrupted the entire taxi industry, but is actually disrupting car ownership in itself. As some people say, man, I don't even want to own a car. I might just take Ubers or Lyfts around, or maybe a Didi if you live in China or somewhere like that, or maybe a Careem if you live in the Middle East, which by the way, they have investments in Didi. They actually own a good position, like billions of dollars worth of Didi ownership. And they actually 100% own Careem in the Middle East as well. Okay, so if you think it's just Uber, no, they actually have tons of ownership in some of the other biggest players in the world, okay? Also getting the #1 player in food delivery around the world in Uber Eats, getting the #1 player in a brand new category of freight through an app, which essentially connects connects a driver to a shipper, and you do it all through an app versus, you know, back in the day, you had to like call it in and whatnot, and those middlemen took a big, huge fee. Uber's taking, from what I understand, like a 1% fee versus a lot of those used to take a 15 and 20%. That's completely going to disrupt the trucking industry over time, in my opinion. And obviously they have other huge opportunities in the future. This will be a company, it has disruption at its core. It will continue to be a company that disrupts industry after industry after industry. And let me just explain real quick how Uber gets to mass profitability. I'm not talking about little profits. I'm talking about billions and billions of dollars worth of profits. And it amazes me how few people actually understand this, because this is not complicated stuff. This is very, very simple business. This is, you know, I kind of am scared that some people don't understand how unbelievably profitable this business will be in the future. I think they just hear that Uber loses money and therefore they think Uber is going to continue to lose money or something like that. And they're not even looking into this in depth. And I found the same exact thing with Tesla stock. When I first started investing in Tesla stock, there was definitely a lot of people out there that were just kind of like, oh, Tesla's a money loser. There's nothing going on with that business. And I'm slowly watching the narrative change around Tesla, and people start to like realize that. Same exact thing, in my opinion, will happen here with Uber, okay? So why is Uber going to be an unbelievably profitable business in the future, okay? Let's just talk about the rideshare business. We don't even have to talk about the other businesses, which will also be some huge profit generators. This one alone will generate billions of dollars of profit per year going in the future, okay? Right now, you know, if you just look at the US market, right? You have two options if you're gonna get a ride. It's an Uber or it's a Lyft, or it could be a taxi, okay? Uber, Lyft, or taxi, let's put it that way. And if you go through each market around the world, you'll find in every single market, there's usually 2 or 3 players in that particular market, okay? So it's not like there's a ton of competition here. There's like if I need to get a ride somewhere right now, I'm either taking an Uber or Lyft. I know Uber, it's in my mind. And before I was ever investing in Uber, I would always take an Uber, okay? We're talking about usually their prices are like 3 times less than a taxi. So taxi's completely out of it. So it's either I take an Uber or a Lyft, okay? And what both these companies are gonna have to do now that they're public companies, they're gonna have to raise prices so they can become very profitable businesses, and Wall Street will quit beating down their stocks, okay? So here's essentially what's gonna happen. Uber and Lyft, these type of companies, are gonna raise their rides by $1 to $7 per ride. If it's a really short ride, you might only see like a $1 increase. For the longer rides, could see something as much as like a $5, $6, $7 increase for the super long rides. That might usually be a $20, $30, $40 ride or something like that, okay? And that basically is gonna happen over the next 3 years, in my opinion. Now, this is not something that changes anybody's opinion. If all of a sudden I go on the Uber app and I have to pay $1 more than I paid last year, I'm not gonna get that ride somewhere. No, I'm not gonna do that. Even if it was $2, even if it was $3. Heck, for me, even if it was $7, but a lot of people, maybe $7 on a short ride, that would be just too much, okay? But essentially for a lot of those shorter rides that are mostly what Uber does, prices are gonna rise $1 to $3 for those shorter rides, and the long rides will probably go up somewhere between $4 and $7 over the next few years. And when you have something like that happen, it immediately changed the business. You got to keep in mind, Uber, the main reason Uber loses money right now was a lot of the stuff that would basically happen when the company went public. You had a ton of like one-time expenses and whatnot. Also, Uber Eats right now, there's a ton of competition in that market. So many people doing like promotions and whatnot because there's so much VC money. That VC money is going to dry up, by the way. And in terms of their other opportunities they're going after, those are heavy investments. That's why they're losing money right now. But some markets are actually making money on rides. Now imagine over the next 3 years as they up those rides, because literally just a $2 change per ride is a game changer for Uber. It is a game changer. They just haven't been able to do it in the past because Uber and Lyft have been fighting over market share, and the same thing with the players in the other markets. That's all starting to end now because these companies are going public and they got to focus on profits rather than just getting the most market share. If Lyft's thinking, do they have like 31% market share or 29% or 33%? That mattered to them a lot when they were private. Now it's not going to matter so much now that they're public companies, okay? So the profits are going to pour in as those rides continue to go up in price over the next several years. And by the way, the main cost to taking an Uber ride is the driver, because the driver obviously makes money, and that's a main cost there. But you know what's going to happen over time? Eventually, you know, autonomous taxi networks will take off. Uber is going to have a phenomenal opportunity of being the #1 or #2 player in that market over time, and then the profits will pour in even bigger over time, okay? So needless to say, this doesn't take rocket science. science to figure out how Uber is going to make ridiculous profits in the future. Literally, just go up $1 to $7 per ride, 1 to 3 on the short rides, 4 to 7 on the really long rides, and literally you start pouring in so many profits, it's ridiculous. And if you think, oh no, Lyft won't allow them to do that or something like that, or the other rideshare markets, no, they're all going to allow it to happen because they all need to get to profitability as soon as possible as well. So that's why it will happen. And if you think somebody's going to come in and disrupt, services like Uber and Lyft, it is completely unrealistic. This would be like trying to disrupt something like Facebook. It's just so hard. People are like, oh, it's just an app. Okay, go create it. Go create the app. Let's see how you compete against Uber or Lyft. It's going to be pretty much near impossible. So hope you guys enjoyed today's video. As always, this was 3 stocks I'm planning on buying in the upcoming month, being December 2019. Let me know your opinion in the comment section. Make sure you smash the thumbs up button and make sure you take advantage of that insane deal we're having on the Becoming Master of the Stock Market once and for all. A 227 deal goes into everything I look for in stocks, teach you how to make dividend cash flow, has my private email address in there. That is definitely time for you to take advantage of that. That will be the pinned comment down there. And hope you guys really enjoy that deal. Thank you for watching. Have a great day.